Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And you, my friends, are in the right place if you've got questions about real estate, questions about mortgages, interest rate, the Federal Reserve. Is the market about to crash? Is this 2008 all over again? What are rates going to do to the market? Is it a good time to sell? Is it a good time to buy? What is going on? If any of these questions are swirling around in your head, and you want answers, you want the information, the data, the inside info, if you will, so you can go out there and make better real estate and mortgage decisions for you and your family, well, you're in the right place. My name is Mark Eitel. You are tuned in to the Mr. Mortgage Show, and we're super excited to be with you. I know it's been a long week. You've been waiting with bated breath. Well, we're back. Happy to be with you. I have Jennifer in the studio with me. Jen is my producer. She's manning the board, and she'll be getting your questions on the air. She also womans womanning the board, the Anytime hotline, the text line, the question line. All of that is in her capable hands, and she'll get your questions on the air. Hey, Jen.
Good morning, Mark.
Hey, good morning. Happy Thursday to you.
Happy Thursday, everyone.
Happy Thursday. Super excited that you're with us. I know you are ready for a good show. My favorite part of the show is your questions. It always is. So let me throw the Anytime hotline out there. You can call or text the Anytime hotline with your questions. That number is 855-462-7292. That is 855-462-7292, and we call it the Anytime hotline because when Jen and I are in the studio doing the show, boom, that rings right here. When we're in the office running the mortgage company, that pushes to my office. So 855-462-7292 is the Anytime hotline. If you have questions, call or text that number. You can also visit us online. Go to the website. In the upper right-hand corner of the website, there's a Contact Us box. You can type your question in there, and Jen will get it on the air for you. That website is mr.mortgage, never a .com. Just type in mr.mortgage. Don't believe me? You don't even have to type in the W's. Try it right now if you're in front of your computer. Go up to the address bar, just type in Mr., hit the little dot, type in mortgage, hit enter, and we'll pop right up. Can't be any easier than that. But guys, we start each show by talking about some of the mortgage-related, interest rate-related, real estate-related news of the week. And man, it is the same old song and dance. Everybody is poking the housing market with a stick, trying to knock it over. You know, I think the economists have all kind of agreed, even though the White House may not, that we are headed for a recession. I personally believe historically they'll look back and say we're already in the recession. But hey, I'm just one guy with a little radio show who talks about mortgages. So who am I to question the big guys? But I think you'll find that we are in a recession now. And the good news is real estate typically does pretty darn good during a recession, and real estate is a fantastic hedge against inflation. And we're going to talk a lot about that. We're going to get to your questions too, as I mentioned. But hey, there was some so very scary, in the spirit of Halloween. Let me try that one more time. So very scary headlines this week from Diana Olick at CNBC, who never disappoints with the gloomy headlines. But, this is all true information and warrants some consideration. So mortgage applications have fallen to their lowest level since 1997. And I find it super interesting. It seems the farther we reach back in a date, it's the biggest this since 1973 or the lowest activity since 1997. The farther back we go, the more significant it feels. But listen, this is serious information here. Mortgage applications are about half of where they were last year, which I don't think anybody is surprised by that with where interest rates are now in relation to last year. And I've said it 100 times. I'll say it 100 more. I don't think a 7% interest rate in and of itself is the problem. I think what has happened is they've increased so very quickly that people have not had an opportunity to digest the 7% interest rate, because honestly, it's not a terrible cost of money. Yes, it's higher than it was pre-pandemic and way, way higher than it was, 12 months ago. Hey, and speaking of that, I shared a post to the Facebook page, and if you want to check us out on Facebook, it's The Mr. Mortgage Show on Facebook, but it was from October 21st, 2021, and that's when I called the bottom of the rate market. Now, I missed it, right, by like 2 or 3 weeks, but that post, I said in the post, is this a Nostradamus moment? Because looking back, it looks like I was a brilliant, prognosticator of future rate increases, because back then everybody was saying interest rates were not going to hit, 3.3% in 2022. But listen, I'm not Nostradamus. I'm just a guy who digs through the data every single day in prepping for this show and then also running our lending business. And it was pretty clear that the inflation pressures were starting. The Federal Reserve had already announced some pretty aggressive tightening plans. Interest rates were going to start to be increased. The overnight rate was going to start to be increased by the Federal Reserve. But more importantly, they announced that they were going to stop buying mortgage-backed securities. And that's what's pushing interest rates right now. As much as we all pay attention to the Federal Reserve raising the prime rate, which is, associated with the overnight rate, the Fed controls the rate at which banks loan money to one another. The mortgage interest rates are controlled by the selling of mortgage-backed securities on the secondary market. And you've heard me say this before, and we can go deep if you want to. Somebody shoot me a question and I'll go way down this bunny trail. As you're hearing me on the air right now today, there's just not the appetite for mortgage-backed securities on the global level that there has been historically. So typically China and Europe are big buyers of the United States mortgage debt. And right now they're not buying. I mean, China's economy's in trouble. Japan's not doing great. Heck, China just announced they're not even going to release they're not even going to release economic data. They're putting it all on pause. Now, what does that tell you? That tells you that there's some bad news that they don't want to release. And Europe is actually, the UK is selling some U.S. mortgage-backed security paper, and the Federal Reserve isn't buying anymore. So because of that, there's not nearly as much demand. And you've heard me say it a million times, supply and demand controls the price of everything. And because of that, prices are coming down, which causes interest rates to go up. So that's what's controlling rates. And until the economies of the world stabilize on a global level, we're going to continue to see rate pressure. Now, does that mean 7 is going to turn into 14? That's highly unlikely. But could 7 turn to 8 or 8 to 9? That could very well happen. And then on the other side of this, we could see rates in the 5s again. But I do think the other side of this is probably 12 to 18 months away before we start to see any relief. And then I don't think we're ever going to see 2 and 3% 30-year money again. That's just my opinion. And we could talk for hours and hours about why I feel that way. And I'm happy to talk for hours and hours about rates. But guys, mortgage applications are down, so the interest rate increases are putting pressure on the buyer pool, no doubt about it. But I think I mentioned it last week. If I didn't, I did it on another station that we're also on. But this, I believe, is the 6th month in a row where new listings are lower. So new listing activity is decreasing also, which means supply is decreasing. And if demand and supply decrease at the same rate, we're still with the same equation. There's still more demand than supply. So prices seem supported right here. Although appreciation is cooling, I think we're down to about a 13% year-over-year appreciation. Still a positive number, but it is starting to pull back. So we watch all of this data so that we can bring you the inside information. That's really where we are right now, is that the increase in interest rates are starting to cool demand, although we're not seeing the supply side release of numbers that we need, if you will, and more supply coming to the market to quell the current demand. But I say all that to at least acknowledge that, the increase in interest rates are starting to take effect. But still, there's still fewer people who want to sell. than want to buy. So at the moment, we're seeing properties appraise and we're seeing prices hit. So with all that being said, you hear the music, you know what that means. That's my cue. We'll be back in 2. Sit tight for 2 minutes. On the other side of this break, we'll be back for more of the show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
It's that time of year again. Time for the Red Devil Cycles Toy Run. Join us Sunday, November 20th. The ride starts at Pineapple Park in Jensen and rolls out to Timer Powers Park, Indiantown. It's going to be an awesome ride, a great day, full of food, fun, music, raffles, giveaway, and so much more. $10 per bike plus an unwrapped gift. Need more info? Check out reddevilcycles.com or give Luann a call at 772-221-8616. Put a smile on a kid's face and some wind in yours.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned into the Mr. Mortgage Show. And you heard the man. You can call or text that number. He always leaves that out. I got to go in there and slap him around a little bit. No, I'm not slapping him around. He's as big as his voice sounds. But anyway, you can call or text the Anytime Hotline, 855-462-7292. That is 855-462-7292. Call or text your questions to that number, and Jen will get your questions on the air. She'll get you on the air live if you want to be on the air with us, or she'll read the questions. If you're texting, please include your first name. We always ask that. You don't have to give us any more information than that, but we do like to acknowledge everybody by their name. So call or text 855-462-7292. But hey, before we jumped into that break, I was just wrapping up my thoughts about the real estate market being buoyed by the lack of supply. And at the moment, that's kind of where we are. You know, interest rates continue to increase. I think there's upside from here in rates. I think that, you know, there's no indication that there's going to be easing in interest rates anytime soon. Do I think they're going to go to 10% overnight? I certainly don't, but I do believe that we go up from here. Then I think we stay stable. We bounce around a little bit until ultimately I think we'll land somewhere in the fives on the other side of this. But again, I can't stress enough, the other side is, 12, 18, who knows, maybe 24 months out, because nobody forecast this to happen as quickly as it did, not even me. I mean, I was calling for rates to increase, but I didn't think we would surpass 6%. So anyway, we're all a bit surprised by it. But the good news is that we've got the plans, the strategies, the programs to help you through it. I mean, we're doing interest rate buy down so that, you're able to get a lower interest rate by using a seller contribution. There's a strategy called a 3-2-1 and a 2-1 buy down that's getting a lot of buzz on social media right now, and all of those TikToks and Instagrams and all of that stuff. I'm sure you're seeing that. If you have any questions about that, give us a shout. And then we're super excited about some new first-time buyer grant programs that are new to our market that provide 100% financing. And yes, Hometown Heroes has been doing that for a little bit, but I like this one better, and it covers a broader spectrum of the population. So we can talk about that if you like, but we're going to dive right in. Let me check with Jen. Hey, Jen, do we have any questions?
Are you ready for some questions?
I'm ready for some questions. What do you got? Throw the first one at me.
Susie sent this one. I've been looking at the Hometown Heroes loan. It seems like it's a second mortgage. Is this right? Are there any better options for a first-time buyer?
Hey, Jen, did you read that question on purpose? Because that is brilliant timing, because I just was talking about Hometown Heroes. All right, so I think you said that was Susie. Okay, hey, Susie, great question. You are absolutely correct. The way the Hometown Heroes program works is that grant, if you will, I believe it goes up to $25,000. That's essentially a second mortgage. Now, here's the cool thing. It does not require a monthly payment, nor does it accrue interest, but you do have to repay it when you sell the house or if you refinance. So to use very, very round numbers, because the only place this property is going to be available in 2022 is Fantasyland. But let's say you found a house for $100,000 and you qualified for a $75,000 mortgage, and then the Hometown Heroes $25,000 second mortgage laid on top of that. You're going to be making a payment based on the $75,000, but you really owe $100,000. You have to pay both of those loans back if you sell or refinance. So you don't have $25,000 in equity. You've got zero in equity, but you're making payments on the $75,000. It's awesome if you never intend on selling, or if you're going to sell, at a point later in time where you've appreciated past the $100,000, and if it was worth $120,000, then you would pay off the $75,000 first, the $25,000 second, and then you'd be left with the $20,000 minus closing costs. Here's the other program that I just referenced, and I want to throw at you. This one is available for all first-time buyers, regardless of employment, where Hometown Heroes, it is available to a pretty broad spectrum, but it's geared towards medical professionals, police, fire, school teachers. Again, a very broad spectrum of people employed within those categories. If you remember I guess it's been a month or so ago, I caught a little flack because the woman who runs the electrolysis machine, who burns off my friend's grandmother's mustache, or at least in high school, our grandmothers aren't alive anymore. But anyway, that woman would have qualified for Hometown Heroes under that broad spectrum of the categories. But here's where I'm going with it. This new program is for any first-time buyers, regardless of employment category. You still have to have a job. But it's a FHA first mortgage, so it's a 96.5% loan, and then a 3.5% grant to get you to 100%. Well, that's forgiven. So, and I mean, it's forgiven right out of the box. So if you sell in a year, if you refinance in a year, that 3.5% goes away. So we're getting a lot of interest in that program right now. There's a lot of buzz about it because the vast majority of first-time buyers, they may have the credit and they may have the income, and they've demonstrated the ability to pay, because you guys are paying a lot for rent right now. Let's not kid ourselves. People are still able to buy and pay a mortgage payment smaller than their rent is right now. And by doing that, your mortgage payment's not going to go up at the landlord's whim each year like it is right now. So, and I can go into a long diatribe about why that's happening. It's not bad landlords, greedy landlords. Their cost of owning the property has significantly increased in this market, and they're just passing it on down the line. But if you want out of that vicious cycle, then you are thinking in the right direction, because homeownership is the only way you control that. So, Susie, great question. Hometown Heroes, it is a second mortgage, although it doesn't require a monthly payment in the form of debt service, and it doesn't accrue interest. It does require repayment upon sale of the property or refinance of the mortgage. So good eye, well spotted for catching that. And then this other program lays on top of a 96.5% FHA loan, so you can get to 100% that way. Great question. Hey, Jen, do you have another one ready?
Pete has this question. I read one article that says rates will hit 10%, and another that says rates will be in the 5s next year. I really want to buy, but just don't know if this is the right time. What do you think?
Hey, Pete, I think either one of those articles could be correct, although I do believe that 5% rate is far off in the future. I don't think it happens next year. Here's the thing, my man. We're all in this situation. We all have the ability to be frozen by fear or uncertainty. You've heard me say it. If you listen to the show, you've heard me say it before. Logic and emotion can't live in the same brain at the same time, meaning it's hard to make a logical decision when you're emotional, or an emotional decision when you're purely looking at the facts and you're being logical. And from my standpoint, when you're talking about borrowing hundreds of thousands of dollars, I always prefer to take the emotion out of it. But let's play both of those scenarios out. Let's say you buy a house today, and let's say you get a rate of 7%. Now, what happens if rates go to 10% next year, right? Because you said one article said could go to 10. Well, guess what, Pete? You're the man. You made a brilliant decision, and you've got a rate of 7%. You've locked in the lower of the options, and you're moving forward and hopefully living in a home that you love and building equity. Now, let's play the other side of that coin. What happens if rates go to 5? Well, you can do a refinance and lower your rate to 5. And you can do a strategic refinance. We've talked about it in the past. I'm happy to dive into that if you want to. There are streamlined refinances. There's a interest rate reduction loan for VA loans. FHA has the Streamline that doesn't require an appraisal, doesn't require income docs. It's purely a rate reduction mechanism. So if you buy now and rates go up, you win. If you buy now and rates go down, you can refinance and you win. So I share all that because if you believe that supply and demand control the market, and right now unemployment's low, people have jobs, and there's just not a ton of supply to drive prices down, now may be the best time for you. And if you have questions about that, give us a shout, 855-462-7292. That's the Anytime Hotline. I'll be happy to deep dive it with you. But hey, guys, you hear the music. You know what that means? That's Jen giving me the cue. That's my cue. We'll be back in 2. Sit tight for 2 minutes. On the other side of this break, we'll be back with more of the show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
It's that time of year again. Time for the Red Devil Cycles Toy Run. Join us Sunday, November 20th. The ride starts at Pineapple Park in Jensen and rolls out to Timer Powers Park, Indiantown. It's going to be an awesome ride, a great day, full of food, fun, music, raffles, giveaway, and so much more. $10 per bike plus an unwrapped gift. Need more info? Check out reddevilcycles.com or give Luann a call at 772-221-8616. Put a smile on a kid's face and some wind in yours.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. I don't know. I still haven't mastered the Stimpy voice. I don't know how many of you remember Ren and Stimpy, but Mr. Morgan, I don't know. Maybe that's Speedy Gonzales meets Stimpy. I don't know. Speedy Stimpy? Stimpy Gonzales. That's what we're going to go with. Mr. Mortgage is Stimpy Gonzales. But anyway, guys, if you're wondering what in the heck's going on your radio dial, you are tuned into the Mr. Mortgage Show. We do this every week right here, same time, same station. And I love taking your questions. That's my favorite part of the show. If you have questions, you can call or text 855-462-7292. That is the Anytime Hotline. 855-462-7292. Jen will answer the phone, or she'll grab the text and read it for you on the air. 855-462-7292. Hey, Jen, do we have more questions over there?
Yes, we have a lot of questions this morning.
All right. Well, we're going to keep the questions rolling here in just a second. Give me the signal when you're ready. But guys, we were talking about that new 100% loan program available for first-time buyers, and I like it better than Hometown Heroes for a lot of reasons. But one of the cool things that I did forget to mention is it's also available to the hero categories, even if you're not a first-time buyer. So it does not discriminate against the hero category by any means. As a matter of fact, you don't have to be a first-time buyer to qualify for it if you work in one of those jobs that fit that category. And just so everybody knows, by definition in the mortgage world, first-time buyer means somebody who has not owned a home in the last 3 years. So if you owned a home a while ago, but you haven't owned a home in 3 years, you are a first-time buyer. But hey, Jen, let me throw it over to you and see if you got another question. Yeah, perfect. Let's go.
Doug sent this text. I was listening to some of your prior shows online, and you talked about a term-specific refinance. Can you explain how this works? Great show, by the way.
Hey, Doug, can you just keep repeating? Great show, by the way. I appreciate that, my man. Hey, guys, and if you do enjoy the show and if you think this is good stuff, please share it. And you heard Doug mention, and thank you for this, brother. You can listen to all the back episodes of the show. I think there's over 80 up there now. But once we're done on the air, Jen will post it, the recorded version, to the podcast page. So you can go to MrMortgageRadio.com. That's MrMortgageRadio.com. And there's a big library of prior episodes, and one of which that Doug was listening to, although I don't remember, we were talking about a term-specific refinance. And this really plays well into Pete's question from the last segment about what happens if rates go up or down from here, and we talked about a refinance. Well, here's the thing. Here's how a term-specific refinance works. Let's say you've had your 30-year fixed-rate mortgage for 3 years. And let's say this is 3 years from now, so you've got an interest rate in the 7s, and rates go back down to the 5s. And you want to do a refinance, which makes perfect sense, because why would you pay that additional interest? Well, you've already paid for 3 years. So in the old days, you would just do either a 15-year, a 20-year, or a 30-year refinance. Now, the 15-year is going to shorten the term, require a larger monthly payment than the 20 or 30-year. The 20-year is going to shorten the term and also require a larger payment than the 30-year. But the 30-year, you're not going to pay it off for 30 years, which means it's going to take you 33 years, right? Because you've already held that first mortgage for 3 years. We can write a 27-year loan, a 26-year and 11-month loan, a 21-year 3-month loan. And I'm getting very granular to make a point. We can get the term as specific as you want, and that's super, super beneficial for someone who doesn't want to pay that loan back for a period longer than 30 years. Although the overwhelming statistics support that the average person doesn't hold a mortgage for more than 7 years. That is a place people get wrapped around the axle. And, you could be 11 years in and you're like, I don't want to go another 30. Well, in that case, you could do a 19-year loan. So that's how a term-specific refinance works. And then for our clients right now that are closing homes in this higher interest rate environment than just a year ago, we've got everybody on Rate Watch. So if you close a transaction with the Mr. Mortgage team, you're automatically enrolled in an equity management tool that gives you a monthly report. It comes to your email. You can do as much or as little with it as you want. You can log in and you can look at your home's equity. You can see interest rates. If I was to do an addition, if I was to sell, if I was to refinance and buy an investment property. So each month you can get in there and, pull the levers and turn the dials. But it's also going to alert you at when it makes the most sense to do a rate reduction refinance or a term specific refinance. But we're putting everybody on that watch. So as soon as rates become favorable, we'll be able to jump in, and we've got a strategic refinance plan where a lot of the fees that are associated with a traditional refi aren't there, because the reality is people, are still capitalizing on the real estate market, buying homes. We're still seeing appreciation, but they do want that lower rate. So that's an option. But hey, great question. I certainly appreciate you listening to the show online. Guys, if you want to check it out, MrMortgageRadio.com is where he heard that episode and where that question came from. But Doug, thanks for that, brother. Hey, Jen, what else do you have question-wise?
Jackson is asking, I saw a house advertised for sale by owner with an assumable mortgage. Is this legit? How does that work?
Hey, Jackson, it is legit. And Jackson, that's a cool name. You guys know I'm a music head, so instantly I went to Jackson Browne. Although I wasn't a huge Jackson Browne fan, I always thought that was a cool name. And one of the guys in my band is Action Jackson, so and he's a pretty cool guitar player. But anyway, great question. How it works is, and it's a lot of loans are not assumable. So, obviously the seller did the research. They're advertising this as an assumable loan. So you've got to apply. You still have to qualify for the loan under whatever credit guidelines that particular loan program requires. So typically the government insured loans like FHA, USDA, or VA are often the assumable loan category. So you'll have to qualify under the guidelines of those programs and get approved. And then here's the only challenge in this market that might become an issue for assumable loans is you're only able to assume that amount. So let's say, and I don't know, maybe the math works, but here's where I see a potential issue is if the home is worth $450,000, but there's a $300,000 assumable first, that means you have to come up with $150,000 to buy that property and assume that loan. So if you have the cash position to put enough money into the transaction to buy that equity, it may work wonderfully for you. So the servicer, not the initial lender, not the original broker, but the person that the owner makes the payments to is the one that you need to call to start that transaction. And just be prepared to buy that equity position out should you get approved. But great question. I think it's a wonderful opportunity to differentiate a property right now. If you're a seller and you've got an assumable loan and that thing's in the 2 or 3s, my God, what a great opportunity for somebody to buy the property and get the home they want with the dream interest rate. And I just think it's a brilliant strategy. And, every time we're in a rapid ascending interest rate environment, the conversation around assumable loans pops up again. And, if all of the stars line up and it works, it's a brilliant opportunity. And here's the other cool thing. You assume that term also. So let's say in that example that they only have, 24 and a half years left. Well, you only have 24 and a half years left before that property's paid off. So I appreciate that question. That's a great one. Assumable mortgages may become a thing again, but most often it's going to be the government insured loan programs. Conventional loans typically are not assumable. But hey, great question, and I hope that helps. You hear the music, you know what that means. That's my cue. We'll be back in 2. Sit tight for 2 minutes, and on the other side of this break, we'll be back. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction, and that starts with a really great agent. If you've got a great agent, that's awesome, but if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
It's that time of year again. Time for the Red Devil Cycles Toy Run. Join us Sunday, November 20th. The ride starts at Pineapple Park in Jensen and rolls out to Timer Powers Park, Indiantown. It's going to be an awesome ride, a great day, full of food, fun, music, raffles, giveaway, and so much more. $10 per bike plus an unwrapped gift. Need more info? Check out reddevilcycles.com or give Luann a call at 772-221-8616. Put a smile on a kid's face and some wind in yours.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And guys, we do this every week right here, same time, same station. Super excited to be with you. As always, I am joined in the studio by Jennifer, my producer. She is a rock star. She is womaning the hotline, the text line, grabbing your emails, running the board, answering the phone. She is making it happen back there. So if you have questions, just call or text Jen at 855-462-729. Sorry, she's giving me a signal that I can't repeat on the air. 855-462-7292 is the Anytime hotline, and she'll get your questions on the air. And speaking of your questions, we've had some really good ones so far. We talked about hometown heroes. We talked about interest rates going somewhere between 5 and 10% in the next year or so, and does it make sense to buy or sell? Doug was talking about a strategic refinance, a term-specific refi. And Jackson brought up a super question regarding assumable mortgages. So guys, if you missed any of that, if you're just joining us, you can always catch the replay at MrMortgageRadio.com. That's MrMortgageRadio.com. And if you're enjoying this and you think somebody could benefit from it, you know I always ask you to do me a gigantic favor and share the show. We're trying to Pied Piper the show. We're always trying to build the audience. If you've got friends or family or coworkers who have questions about real estate or mortgages, they're thinking of buying or selling, and they just want somebody in their corner, I'd love to jump in. So introduce them to the show. I'd be happy to help them any way that I can. 855-462-7292 is the Anytime hotline. And if you have questions, we'll help you out right now. But hey, speaking of questions, I know Jen said we've got some more that came in, so I'm going to throw it over to her for another one. What do we have, Jen?
Nellie left this one for you. I'm a legal resident alien and have an I-10 number. Can I qualify for a mortgage now, or do I need to wait until I get my citizenship?
Hey, Nellie, that's a great question. So, let me start by saying yes, and yes. You can purchase a property with an I-10. And for people who are out there scratching their head, what an I-10 is, it's an individual taxpayer identification number. And that's what someone immigrating to the country gets before they get their Social Security number. So with an I-10 number alone, you can qualify for a mortgage. Now, when I say alone, you're still going to have to show income, assets. You got to go through the full process. But what I mean is you're not going to have citizenship, or there are much looser guidelines around permanent resident alien, You can even buy a property in the U.S. with an ITIN number if you're not a permanent resident alien, and you can buy a property here in the U.S. as a vacation home. So fantastic question. ITIN applicants are able to get approved. Typically, you're going to put a little bit of a larger down payment down. And then if you're going through the immigration process, there are additional loan programs that you will become eligible for prior to you obtaining your citizenship that will require a smaller down payment than the straight ITIN program. But they're out there. We fund them. We're happy to help. So that's a great question. Thank you for that, Nellie. And I hope that helps. If you need more information, just give us a call, 855-462-7292. But I'm going to keep the questions rolling. Let me throw it over to Jen. Hey, Jen, what do we have?
This one is from Dorothy. I'm 81 and don't have a mortgage on my home. I don't have much income, only Social Security and a very small pension. Will I be able to get a reverse mortgage?
That was Dorothy?
Yes, that is correct, Mark.
Okay, thanks, Jen. All right, Dorothy. So yes, you can. Here's the thing. The reverse mortgage doesn't require income. And what I mean by that is you do have to have the, income to be able to maintain the home and pay for taxes and insurance. And if there's any HOA fees due. But in certain instances, that money for those things can be taken out of the reverse mortgage and put in it's called a LESA, L-E-S-A. It's a set aside account for those expenses. So it can be removed from the equity, put into an escrow account so that you've got access to it. But what I mean by it's not driven by income or credit, still the underwriter is going to look at your ability, right, which is income, to repay debt, and willingness to repay debt. So they're going to see, okay, how are you managing your debt now? And it's not uncommon for somebody who's waited a little bit longer than perhaps they should have to start inquiring about a reverse mortgage. They may already be cash strapped. And that's what that set aside account is for, that LESA, the LESA set aside account, to help cover that. So I'm going to encourage you to look into it, because with no mortgage on the property and Social Security as well as a pension, unless you've got a ton of credit card debt and a ton of other debt that is requiring debt service, there's a very, very, very good chance that you'll be able to get the reverse mortgage. And guys, reverse mortgages are something that's super, super close to my heart. I mean, they have been for a long time. And I got involved in the reverse mortgage space when someone super close to me found themselves in a bit of a pickle, outliving their savings, but having a ton of equity in their house. And they started to look into their options. And the reverse mortgage is a wonderful product if you need it. It's not the right product for everybody. And I say that all the time. But it's a fantastic product for this example right here, where maybe that fixed income is just getting battered by inflation, and the taxes and the insurance on the property keep going up. And perhaps maintenance is now becoming an issue, because a lot of people who take reverse mortgages have lived in the property for a long time, and maybe it needs a $40,000 roof or a $7,000 AC system. And those are big, big numbers when you're trying to manage on a fixed income. And a lot of people live in the home they love. They don't want to move. So this loan product gives you access to the equity so you can live a little less stressful life and not having the burdens of managing that fixed income against these inflation numbers that we're seeing. So a lot of people are looking to the reverse mortgage product right now. I'm happy to help. I hope that information helps you. I encourage you to give us a call. I'd be happy to walk you through it myself. But Dorothy, I appreciate that question. Hey, Jen, do we have another one?
Brandon wants to know. Last week you talked about the pros and cons of buying down the interest rate versus just paying less for a house. I missed part of your answer. Can you explain that again? I looked for the replay on the station website, but I didn't find it. Thanks.
Hey, Brandon, that's a great question. And hey, Greg, did you hear that? They can't find me on the website. It's not Greg's fault. So go to MrMortgageRadio.com. We have our very own website for the show. All the back episodes are there, MrMortgageRadio.com. But hey, Brandon, thank you so much for that question. So there are pros and cons to both sides of the equation, right? Buying the rate down, and we used an example, I think it was last week, the week before. I'm not sure what episode Brandon's referring to, but I know in the last couple of weeks I used a very specific example where the seller was willing to take a $10,000 price reduction on the property. And $10,000 in the form of a concession to the buyer, who then bought the interest rate down significantly with that 10 grand, they were able to save themselves with the interest rate reduction strategy a couple $100 a month, where by lowering the price $10,000, it would have saved them less than $50 a month. So huge impact on payment by buying the rate down. And that example really, really illustrated it. But that's how it works. I mean, if you're looking purely at the cost of obtaining that property, there is a break-even period to offset that additional $10,000 that you're paying for it. But you can see with a couple $100 a month in savings that you're doing that in about 4 years. So after 4 years, it's a win for you. It's a home run. But hopefully that helps. Lowering the interest rate reduces the payment far more than lowering the price. And guys, I'll put a chart up. Go to Facebook and search the Mr. Mortgage Show, and I'll pin a chart to the top that shows you for every increase by 1% in interest rate, how much that reduces your buying power. And it's quite significant. But man, that was a brilliant question, Brandon. I appreciate you for that. Hopefully that helps. But guys, you hear the music. You know what that means. That means we got to jump into a break. That's my cue. We'll be back in 2. Sit tight for 2 minutes and join us on the other side of this break for more of the show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
It's that time of year again. Time for the Red Devil Cycles Toy Run. Join us Sunday, November 20th. The ride starts at Pineapple Park in Jensen and rolls out to Timer Powers Park, Indiantown. It's going to be an awesome ride, a great day, full of food, fun, music, raffles, giveaway, and so much more. $10 per bike plus an unwrapped gift. Need more info? Check out reddevilcycles.com or give Luann a call at 772-221-8616. Put a smile on a kid's face and some wind in yours.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned in to your very favorite real estate and mortgage show of the week, the Mr. Mortgage Show, right here every week, same time, same station, and super excited to be with you. Guys, if you have questions, call or text 855-462-7292. That is the Anytime Hotline, and Jen will get your questions on the air, and I know she's got some more, so let's keep them rolling. Hey, Jen, what do we have?
Monique sent this in. Can I buy more than one property at the same time with the landlord loan? I have a chance to buy 3 duplexes from the same seller.
Hey, Monique, that's a fantastic question. And guys, if you don't know what she's talking about, the landlord loan is a loan product that is designed for investors, and you do not have to qualify with any of your personal income if the property cash flows. And yes, Monique, you can buy up to, I think it's 20, it might be 30. I'll pull the guidelines and post them to the Facebook group. I think it's either 20 or 30 properties. The same investor can have landlord loans on 20 or 30 properties. So 3 is not a problem. Great question, and congratulations for scoring a trifecta of duplexes. So good luck with that. If you need help, give us a call, 855-462-7292. Hey, Jen, do we have any? Okay, perfect. What do we have?
Tammy is asking, I'm recently divorced. I haven't worked in 13 years. But I received a nice settlement, and I also get alimony as part of our divorce. Can I use the alimony as income for a mortgage? I really prefer to own instead of rent. Do you think I have options? Thank you, Mark.
Hey, Tammy, yes, you have options. And yes, you should buy instead of rent because you know the power of equity, because I'm guessing a portion of that settlement might have come from equity that you and your previous husband had built up by owning your property. So yes, you do have options. There's a loan program that allows, if that settlement that you received is enough to pay for the property in cash, then there's a loan program called Able to Pay in Full, and there's an acronym for it. Then you can qualify with that loan program. And yes, you can use your alimony. However, here's the caveat. It would have needed to be in place for the last 2 years and remain in place for at least 3 more. So look back 2 years, look forward 3, and you can use that income. And guys, that's true for anything. Disability, Social Security, pension, IRA, annuity. If it was in place for 2 and remains in place, child support for the next 3, you can use it as income. But Tammy, brilliant question, and I'm happy to discuss it in more detail should you wish. 855-462-7292. But hey, we've had some really good questions this week. That was a good one. We talked about assumable loans. We talked about, I think the only thing we didn't talk about was HELOCs, but we've been talking a lot about those as well. We talked a little bit about a reverse mortgage. Yeah, great questions, guys. If you missed any of the show, you can always catch the replay at MrMortgageRadio.com. That's Mr. Mortgage Radio. But hey, you've heard me ask before. I got a huge favor to ask of you. We do this every week. We love coming to you live here and answering your questions, but I'm going to ask you to help me Pied Piper the show. If you got any friends or family or coworkers who are out there struggling right now to make a decision, is it a good time to buy? Is it a bad time to buy? Did I miss the boat? If I'm thinking of selling, should I just sell, pocket the money, and go rent? I know there are a ton of questions swirling around out there. Please introduce them to me, to Jen, to the show. We would love, love, love to help any way we can. But guys, we certainly appreciate you. You can check us out at MrMortgageRadio.com. You can share that link with anybody. The Anytime hotline is 855-462-7292, or visit us online at mr.mortgage. Never a .com there. We tried to make it super simple. Just type in mr.mortgage, hit enter, and the website will pop up. You'll be able to learn more about me, about the team, about the show, about what we do. So, guys, as always, we love, love, love spending time with you. But we are about to wrap up another episode of the Mr. Mortgage Show. Jen, thank you so much for spending some time with me. Say bye to the folks. Say bye, Jen.
Goodbye, Jen. Have a great week.
Have a great week, everybody. Guys, you hear that music? That means my time here is finished. I'm off to the office. If you need me, give me a shout, 855-462-7292. Find us online at mr.mortgagenever.com. Just type in mr.mortgage, or check out all the back episodes at mrmortgageradio.com. Have a fantastic week. Jen and I will be back next week right here, same time, same station.
That's a wrap. Join Mark Eitel next week for more thrilling, edge of your seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.